Singapore's economic outlook has improved slightly after a higher than expected growth of 3.9% in the first quarter of the year. The expansion is due to front-loading activities ahead of US tariffs. But analysts caution that a slowdown is likely in the months ahead, especially in external-facing sectors like manufacturing. Nadirah Zaidi with this report.
Wholesale trade, finance and insurance, and manufacturing got a boost as businesses rushed to ship ahead of US tariffs. But experts warn this momentum may fade once the US-China 90-day truce ends.
We can expect this front-loading to continue in the second quarter. That said, in the third and fourth quarters of this year, when the full effects of the tariffs come in, we can then expect exports and trade to slow down significantly in the third and fourth quarters.
This caution is echoed in the Trade and Industry Ministry's latest outlook, which flags continued global risks clouding the road ahead.
First, elevated economic uncertainty could lead to a larger than expected pullback in economic activity. Remember, it's just a 90-day pause. Second, a re-escalation of tariff actions, including retaliatory tariffs, could lead to a full-blown global trade war. And third, disruptions to the global disinflation process and recession risks in both advanced and emerging markets could lead to destabilizing capital flows.
These global risks are hitting closer to home, with sectors like retail trade and food and beverage already feeling the pressure, and that impact could spread further.
In terms of food and beverages sector, hotels and restaurants, they might see fewer orders down the road. And then, of course, this will also impact or reflected in a way in the financial sector, because it will lead to decline or deceleration in transaction data and also any bank transfers or stuff like that.
Still, there are some bright spots. The transport engineering cluster and the construction sector are showing strength, supported by large-scale projects like the expansion of Changi Airport's Terminal 5. Looking ahead, MTI maintains its GDP growth forecast for 2025 at between 0 and 2%.